Welcome back to the stock portfolio update videos. Currently, my two stock portfolios sit at a combined value of just over $76,000. That's made up of the $46,958 in my stake portfolio and the $29,381 in my Vanguard portfolio. Having a quick look through both, you can see nothing has changed too much in terms of my holdings, except I did sell out of one of my positions, which was McDonald's, which I'll go through today and speak on why I did that. I'm also going to go through today Nvidia's recent earnings and the change in sentiment around the stock recently. First of all, I wanted to just go through a quick portfolio update. This is going to be a bit of a longer video, a bit more slow paced, but I wanted to break down a bit more into my portfolio, make a bit more of a long form content. As you can see, my overall portfolio is still up. It's now up 33.68%, which is around $11,829. Just recently, my stock portfolio was only up 23% after we had that market downturn. The market's been quite resilient and has bounced back, as you can see, from when it had this downturn here around the 5th and 6th of August. Looking now, my overall portfolio has been growing, and I've tracked that on my Excel spreadsheet, which I'll show a little bit later. And going through my main portfolio positions, starting off with Apple, you can see this has had really strong returns recently, in terms of it bouncing back, up 27% in the last 6 months alone. This was a stock that a lot of people had worries about going forward, just to do with its innovation, just seeing if it was falling behind. But it is a position I kept a hold of. I own around 18 shares of it, 18.329, and I'm now up around 60% or $1,585, taking my total equity to nearly $4,200. My average share price is 142, as this was actually the first stock I ever purchased back when I started investing. And you can see if you've been investing in it for 5 years at least, you've already got over 300% returns, more than likely if you just held your position. So it's been an amazing investment to hold. And yeah, recently it's had a nice little bounce back. And I did actually buy a little bit of Apple a little while ago when it was kind of trading flat. Not much, but it's been good. I don't see myself, a lot of people I follow, such as like Joseph Carlson, who does these portfolio update videos as well. He actually was selling out of his Apple position, or he was moving money out of it, I believe. And it was something I thought of, and now I'm up 60%. Again, recently, because I haven't been in dollar cost averaging into Apple, it's made the gains as a percentage look a lot stronger. But it is potentially something I maybe do look at locking in some gains, but for the time being, I plan to keep it. Reason being is I don't see Apple going anywhere anytime soon. Whilst it has been on an amazing run, and it is obviously harder to grow the bigger you get in terms of keeping up that growth rate, I do still see Apple as a strong company that if I was to not look at my portfolio for a number of years and then come back to it, I believe Apple would still be doing a good business, still be printing money, and it's probably still a company I'd want some exposure to. Granted, I do get exposure into Apple in VOO, which I'll go through next, is actually my biggest holding by far. It's sitting at $15,391 in market value. That's USD, and it's basically 50% of my portfolio. So when I sold out of McDonald's, I decided to allocate those funds towards VOO. Reason being was I was looking at other positions such as Microsoft, which has traded flat in the last 6 months, and other holdings that I have or have looked at. But I'm trying to get a bit more discipline in terms with make sure I'm meeting my investment goals and criteria. So with my stake portfolio, I had a goal to keep VOO at 50%. So reason being is it holds me accountable in terms of keeping 50% of my positions in the market, in the overall S&P, because I don't see myself as some amazing investor who spends hours and hours doing stock research and trying to get in at the best price, trading, anything like that. I just want to get strong returns, keep 50% in the market, and then the remaining 50% in just this portfolio, I can pick companies I really believe in and try to get an outsized return But I still, as you can see with the other positions, they're still very big, blue chip, pretty much strong, stable companies. So I'm not necessarily investing in a lot of risk, but I am pretty heavily weighted towards tech. So that's one of the reasons I do continue to grow my VOO position. I know the S&P 500 is also heavily weighted towards tech, but my goal is to diversify a little bit with this portfolio while still getting maximum gains. And obviously tech has been the place to get those gains in recent years. Totally, I'm almost at 30, basically at 30 shares in total, and I'm up around $3,170 or 26%. Again, because I dollar cost average into this so much, I'm not really focused too much on the price I'm buying in at. Again, if it is trading at a discount, if the markets has a downturn, obviously I'll try to allocate extra funds like I have recently. But again, my goal with this position, I've been investing in it for years now, is just to keep dollar cost averaging and growing it so that my dividends keep getting bigger, which they do, which I'll show as well later in the Excel spreadsheet, and overall keep getting more and more compound interest and kind of growing that snowball. So the money that I sold with my McDonald's position, I locked in around 13% gains in not the longest amount of time, and there's nothing wrong with McDonald's specifically. It was just I'd already had that for a while. I'd considered selling out earlier, but I never did. I held on. As you can see, if you look through, this is when I bought originally down here in October, and it was trading in the 250s, 260s, and I rode it up in that short term, basically 13% here, considered selling, didn't sell, held on, so I was forced to hold it all the way through here, and now it's had this recent resurgence, and I managed to sell it up here. So I was managed to lock in some gains. Like I said, I believe it was around 13%, and I think it was around $800 and something in US equity. So again, what I did was I just allocated that all into VOO, and that's now taken my overall position to over 15,000, which has been a goal of mine. And this portfolio is getting slowly closer and closer to 50,000, which is another goal of mine that I believe I will be able to tick off in the upcoming month or 2 months. Going through my portfolios again, my Vanguard portfolio is very close to hitting 30,000, which will be nice to tick off. And that's made up again of the 2 positions that I hold. I didn't invest any money this last month because this last fortnight, because I had some personal expenses I had to pay. So I was kind of strapped for cash in terms of that pay cycle. So that will be that. And then this upcoming one as well, I'm more than likely going to be saving a chunk of it, just because I want to balance out again, I do these portfolio updates, but I also obviously keep money aside elsewhere and keep cash and things like that. And I want to make sure that my buffers and emergency savings and everything like that is built up in case of something happening. And now that I've hit broken the $75,000 mark, the next goal is obviously 100,000. And I believe I'm still going to be well on the way to hit that start end of next year. But for the time being, I need to build up my personal savings. That's kind of my goal. Having a quick look at the Excel spreadsheet, I just updated this morning. And as you can see, this gives a bit of a better view of how things are weighted between the portfolios and kind of the allocations. So again, VOO, get that to 50%, pretty much there. And you can see these 2 graphs track how my portfolios have been growing over the years. It's very nice to look at because sometimes, like I mention every video, you can invest money and sometimes you don't really see the short-term gains of it, or you don't see the short-term outcome. But when you kind of put it on a graph like this, you can see month after month after month, things slowly trading up, be that through deposits, be that through market gains, or both. It's been quite consistent for me, and I plan to keep tracking these just as motivation as well. Because if you go back and see any of my older videos, even at the start of this year, you can have a look. My stake portfolio was sitting at 32,000, and my Vanguard was sitting at 20. They're now sitting at 29,000 and 46,000, nearly 47,000 respectively. So it's been very good this year, and I plan to keep that momentum up. And that's with me having gone on a month-long holiday over to Europe and going down to different cities and stuff like that. So I have still been spending and living and paying board and rent. So whilst balancing my day-to-day life stuff with my investment journey. Looking at dividends as well is something I updated. This last month I only got $11.33 in my stake portfolio. I believe I got dividends from Apple, maybe JP Morgan and Costco, but yeah, very small dividends. Again, the only large dividends I get in my stake portfolio is my Vanguard dividend, and that comes every quarter. But my goal for my stake portfolio is not to get dividends. Dividends are obviously a nice addition, but the goal is capital gains. All my dividends I reinvest. As you can see, my total dividends since I started tracking this at least is $471 USD. So that would be in the 700s for AUD, I believe. And then you can see my Vanguard dividends is sitting at 1,079. So again, that's going to be every quarter. And if you have a look at my Vanguard dividends, that's where the growth has really been, because in 2023 I only got $403 in dividends. Already now we're well over that, and it's only been, or we're over that, and it's only been 2 of the 4 payments, so that will be good. Or 3 of the 4, I should say, sorry. But I'll well beat that. I should get into $1,000 in dividends this year, which was a goal of mine, and $1,500 in dividends between the 2 portfolios. I can hopefully also hit. Granted, I keep investing in my Vanguard portfolio, which I plan to do. The next investment I do will be into my Vanguard portfolio to break that $30,000 mark. And I'll do a bit of an update on where I decided to allocate those funds. But again, going through my Excel spreadsheet on the 2 portfolios, everything's kind of breaking up towards where I want it. I just have to get a bit more disciplined, hold myself accountable to keep VOO at 50% instead of obviously just pumping money into my tech stocks. And also making sure I keep my emergency fund where I need it to be, and my savings goals for things like trips in the future, saving for a house, things like that. Sometimes I find myself I can get too caught up in just growing these portfolios because I track them, and whilst it's still good, I'm not spending that money like gambling it or anything. It still should be keeping a cash position as well, so I can have enough money there for when the market turns down, and I can make the most of down markets to grow those positions like I did in 2022. Speaking of 2022, I sometimes mention it, but that is a lesson, or one of the biggest lessons I've had. If you see here 2022, the kind of down year it had, where my portfolio was actually in the negative 10 to 20% at points, and I continued to buy in. Obviously my portfolio was a lot smaller, and now I'm kind of reaping the rewards of it. So I'm trying to build up that cash base, like I keep stressing, for if there is another market downturn. Because when you look at a lot of the positions in my portfolio, they are very expensive, you would say, at the moment. They're trading at very strong multiples, high PE ratios, such as like Costco is a company I love. I only own 2 shares of it because of how well it's done recently. Like if you look in the last year, it's up 68%, and it's just been ripping. I only own 2 shares because I bought in ages ago, and now I'm up 80% in it, and my average share price is under $500. I remember saying on videos saying if Costco drops right under 500 again, I'll do another big buy-in, and it never did. It just kept going up and up and up. And now it's hard for me to justify a lot of these positions. Yeah, trading at a 55 PE ratio. I love Costco, but it is getting quite expensive when you look at it. And it's one of those ones where you look, should I be locking in gains? Again, that's 823 USD that I can secure right now, basically a whole share, and I can put that money elsewhere. But I still do believe in Costco and a lot of these positions, but it is hard to justify buying in. That's one of the reasons I bought into Amazon. Whilst it's had pretty much, its returns have been the exact same as the S&P 500. I think the S&P is up 96 or something, and Amazon's up 100. So very close. But this is a story of when did you buy in. If you were buying in around 2022, 2023, you obviously have done really well. And recently, I did a video on my addition into my Amazon portfolio, my Amazon position, and I bought in a decent chunk, and it's taken my total equity to 1,500 pretty much, at an average share price of $160. You can see this is kind of where I was buying in, right here, right by the bottom of when it dipped down, and it's had a nice little turn up in this short period of time. Basically a month I'm up 11%, so I would be a fool for complaining. I'm up around $151, and again, that's just where I'm trying to find places in the market with that I can kind of capitalize on. Again, that's only 5% of my portfolio, so whilst the long-term goal is still to build up the portfolio slowly through my indexes, those little 5% plays can hopefully help me do market-beating returns over the long term. And it also allows me to have a bit of fun with my investing, because I do these videos and I do a lot of shorts as well. And if I was just putting money into ETFs every single week, I could obviously track it and it'd be interesting to see the growth. But sometimes I think that could get a bit boring. So doing these little individual investments, I can hopefully create a better content, and I can also get a bit more money in the short term and long term. The other position I was looking at maybe moving money out of was JP Morgan. This was a position I actually did sell out of. I had more money in this and I sold out. I pretty much sold, I think, like 2 shares, and I put that money into Google. I'm up 75% nearly, at an average share price of 128. I tried to diversify away from my tech holdings when I bought into this JP Morgan position, and it's done exceptionally well for me. I actually used to own Goldman Sachs and JP Morgan. I sold out of Goldman and put all the money towards JP Morgan, and it's done quite well for me. It pays a good dividend. Again, I don't really care too much about dividends, but it's just good to know and reinvest it all. But yeah, that's 2 of the positions I'm looking at selling at. But the thing is, they also help me diversify away from my tech portfolio positions. So that's one of the reasons why I'm so inclined to keep them. That's one of the reasons I was inclined to keep McDonald's. But I ended up deciding to put it into the S&P. Google is another interesting one. It's had a bit of a mixed time. I grew my position a lot. I was a position I held years ago, sold, bought more in recently, and I'm up around 19.5%, which isn't bad. And again, it's up 19% in the last 6 months, and that's pretty much been my investment period. But it's had a bit of a downturn. If you look at the last month, it's down 5%. There's a lot of issues, legal issues at the moment with Google, people worrying that they're going to split them up and make them divest their business. But again, I'm kind of long-term on Google. I think in terms of AI, they should be one of the front runners. I think in terms of their overall monopoly, yes, it might get a little bit affected in terms of search, but they have so many different avenues, and they trade at a 23 PE in comparison. If I show you the other, so again, Microsoft is a 36 compared to the 23. Apple is a 34. Amazon is a 41. So in terms of the PE ratios for all the tech companies, it trades at a discounted one. And that's one of the reasons why I was interested in buying into it. And again, it's only a 5% position, same as Amazon. So any extra gains I can get in that, I just see as a bonus in the kind of the grand scheme of things. I did want to also go through Nvidia. So Nvidia's earnings was kind of a mixed bag. We'll look at the stock quickly as well. So if we go Nvidia and you have a look, it's still up in the last month. Yes, it's down 9% or 8.5% in the last week. But again, last 6 months, 45% gains, which is absurd. Last year, 140%. And last 5 years, 2,750. So it's been a massive ride. This tiny little downturn in terms of the scale of things really isn't massive. But this is a stock I considered investing in. I couldn't really justify it. I definitely can't justify it at the moment. It's now one of the biggest companies in the world. And I saw someone actually do a video on it. Again, you can do your own investment research, and if you think it's a good idea, maybe it is, and you make more money than me, that's up to you. I still get an exposure to Nvidia in my ETFs across my Vanguard portfolio and VOO. So I still am happy that I get some exposure to Nvidia. But in terms of keeping up its growth rates would be insane, just because of how well it's done. So if we have a look through, Nvidia's earnings report shows the problem of being priced for perfection. Nvidia reported better than expected results on Wednesday and issued optimistic revenue guidance, but the gross margin slowed slight slippage. The stock, up almost 9-fold since end of 2022, slid in extending trading, and revenue increased 120% from the year earlier, topping the estimate 113% growth. These numbers are absurd when you look at them. 122% growth year on year is crazy. And Nvidia reported its fourth straight quarter of triple-digit revenue growth on Wednesday, sailing past estimates on the top and bottom line, also issuing a forecast that topped Wall Street's expectations. The company even bolstered its buyback program with a plan to repurchase 50 billion in shares, but the stock dropped 7%. So that just shows you it's doing all the right things. It's doing in terms of share buybacks. It's beating its expectations, but this stock has been run up so much that any little thing will cause a market pullback. And it's not necessarily a market pullback. It's also people locking in their gains from the money that they've made. I mean, you look at the CEO, he also sold out, I think it was $300 and something million worth of shares, and kind of, which you would expect, kind of securing his future for his family, his future generations with that kind of money. So that's the problem investors have when something shot up so much. It's, do you take your gains or do you kind of look long term? That's live for Nvidia. It's ridden the artificial intelligence boom to $3 trillion market cap, soaring almost 9-fold since end of 2022, and surpassing every public company other than Apple in valuation. And it even topped Apple, it even topped Microsoft. In addition to reporting 122% annual growth on Wednesday to over 30 billion, Nvidia said its sales in the current period will jump 80% to roughly 32.5 billion, and analysts were expecting 32 billion. Nvidia says it expects to ship several $1 billion worth of Blackwell revenue in the fiscal third quarter, which ends in October. Blackwell is the company's largest generation of technology. Following the Hopper, there will be some concerns that Blackwell could be delayed, but the CFO said on a call with analysts the supply and availability has improved. Yeah, it's just been a crazy story. It's that you can beat your expectations and earnings like that, but you can still have a market pullback, and that's just the stock market and how it shot up. Again, you can probably look at Nvidia and make a bull case for it, and you can probably also make a bear case, but that's where everyone has to do their own individual inspections just to see what they can kind of justify investing in. Looking at my portfolio, in terms of exposure to AI, obviously Apple is a player, or they will be. You have to expect from all the tech giants. Google is obviously, and Microsoft has its partnership with OpenAI, or not even partnership, they own a large chunk of the company. And then with VOO, I get exposure to Nvidia as well. Looking through my Vanguard portfolio, in this position, my biggest, it's VGS, which is Vanguard's International Shares ETF. I've checked the actual percentage of the holdings, but yeah, there it is. So Nvidia is 4.4% of the portfolio, up there with Microsoft and Apple. So I do get exposure to Nvidia, so I'm not too worried necessarily about missing out on the money, because I think long term, having exposure to VOO and having exposure to those other ETFs, I'll still get the tech gains, hopefully. But that was just a quick wrap up. Again, sitting at $76,000. No extra holdings this week, just the sale of McDonald's and purchase of VOO. But hopefully going forward, I'll be able to get it up closer to 80 grand. And hopefully next video, my portfolio will be sitting at 30,000 for my Vanguard. That's all for today. Cheers.